Welcome back, my friends. Well, the title says it all. Intel has cut its dividend by 2/3. This announcement comes just days after Intel's disastrous Q4 earnings report. The weak fourth quarter numbers that sent Intel shares plummeting. It also comes after Intel announced executive pay cuts. CEO Pat Gelsinger's base pay will be cut by 25%. The consumer PC business has definitely hit a rough patch. Sales of high-end semiconductor chips have weakened. Demand is way down. 2022 has also basically been a bad year for chip companies. That is especially true of the companies that sell the most powerful chips. PC sales are the weakest that they have been in a few years now. And that has Wall Street analysts pretty unhappy. The pandemic fueled a boom in laptop sales to enable people to work from home. But, now, we are in the post-pandemic hangover. So what does this mean for PC companies? What does it mean for big tech companies? What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Today, Intel cut its quarterly dividend by more than 65%, from 36.5 cents to 12.5 cents. This cut comes just weeks after the company implemented a wide-ranging set of cost cuts. Intel CEO Pat Gelsinger announced the cut on a call with Wall Street analysts. He said that the company's board was cautious in weighing the first dividend cut since 2000. He added Intel intended to resume growing the dividend over time. The board and I continue to view the dividend as a critical component to the overall attractiveness of Intel, he added. Intel shares were basically flat following the announcement. The board and I remain committed to maintaining a competitive yield, insisted Gelsinger. Intel's dividend yield is now 1.9%. That is based on Tuesday's closing price. That yield is down significantly from its prior yield of 5.6%. The dividend will be payable on June 1st. Prudent allocation of our owners' capital is important to enable our IDM 2.0 strategy and sustain our momentum as we rebuild our execution engine, Gelsinger said in a press release. For what it's worth, Intel reaffirmed its recently issued outlook for the first quarter of 2023. Intel guided to a 15-cent non-GAAP loss per share. But the company did not provide full-year guidance. And who did they blame? You guessed it, weak macroeconomic conditions. Intel's most recent results were a train wreck. They had a top and bottom line miss. And a $664 million net loss for the fourth quarter of 2022. Intel's Q4 earnings call sent its share price sharply down. No words can portray or explain the historic collapse of Intel, Rosenblatt analyst Hans Mosesmann wrote after the earnings report. Few other large-cap companies have made such sizable cuts in recent memory. Asset manager Blackstone took its dividend from $1.27 to 90 cents in October 2022. Telecom giant AT&T slashed its dividend nearly in half in early 2022. Other companies have cut dividends in recent weeks. Rio Tinto, one of the largest mining concerns in the world, slashed its dividend Wednesday. BHP, another mining firm, announced a 90 cents dividend on Monday, down 40% year-over-year. In the apparel space, Hanesbrand eliminated its dividend wholesale earlier this month. VF Corp, which counts North Face and JanSport as subsidiary brands, cut its dividend by over 40% earlier this month. Intel's stock has fallen nearly 60% from its 2021 high. And that is for a combination of reasons. A challenging PC market. And a host of company-specific issues. That includes a surplus of chips. And underutilized factories. The company said it aimed to deliver $3 billion in cost savings this year. In part through compensation cuts. Intel's fourth quarter loss was the chipmaker's largest since 2017. Intel executives will take staggered base pay cuts. This comes just days after the chipmaker reported abysmal fourth quarter earnings. The company is also cutting benefits valued in the tens of millions for lower-level employees. The pay cuts will impact executives at all levels. Starting with CEO Pat Gelsinger. And ranging down to mid-level managers. Gelsinger will have his base salary cut by 25%. That amounts to a cut of $312,000. But the vast majority of Gelsinger's compensation is from stock awards and options. Gelsinger's base pay was $1.25 million. according to his offer letter that amounted to just under 0.7% of his pay. Gelsinger made nearly $179 million in total compensation for 2021. That was his first year in the top job. Intel's share price has fallen over 50% since February 2021. That was Gelsinger's first month as CEO. The real costs may be felt among Intel's rank-and-file employees. Intel employees, like many Americans, rely on bonus payments and retirement matching programs. Intel will cut 401k matching in half from 5% to 2.5%. That will potentially saving Intel hundreds of millions of dollars. Intel spent $489 million in 2022 to match employee contributions to qualified retirement plans. Intel will also suspend merit raises and quarterly bonuses. Intel's pay cuts will also impact other leaders. Executive team members will take a 15% cut. Senior managers and mid-level managers will see pay cut by 10% and 5%, respectively. Lower-level employees would not be affected by pay cuts. Intel reported a net loss of $644 million for the fourth quarter of 2022. The company projected a weak 2023 outlook for Q1. That included a 40% year-over-year decline in sales in the March quarter. Intel rival AMD, on the other hand, beat on both the top and the bottom lines. But AMD guided down 10% for the upcoming quarter. Intel shares were down just a little following the announcement. These are tough times in the PC patch, and for semiconductor companies in general. Intel has already laid off 20% of the workforce. The layoff is basically in response to declining demand for the Intel's consumer chips. The PC market is a downturn as the economy works through the post-pandemic hangover. The layoffs come even as Intel is ready to get billions in funding from the 2022 CHIPS Act. The CHIPS Act is a package of U.S. government spending designed to boost chip manufacturing in the United States. Intel's sales and marketing teams will be hit particularly hard by the layoffs. Intel currently has 113,700 employees. The PC market is now struggling after basically 2 years on steroids driven by pandemic-fueled work-from-home demand. Global PC shipments 68 million units in Q3, which is 19.5% less than Q3 of 2021. That is the largest PC market decline since market tracking began in the mid-1990s. Intel discussed these difficulties in its Q2 earnings conference call in July. The company noted that its consumer semiconductor chip sales had declined by 25%. Overall company revenue declined by a whopping 22% year-over-year. Because of that, Intel actually lost $500 million. Intel reported a 109% reduction in profit in Q2. That compares with the $5.1 billion it made in Q2 2021. During the Q2 earnings call, Intel CEO Pat Gelsinger basically telegraphed the layoffs. He noted that Intel would be lowering core expenses in calendar year 2022. Q3 shipments in the global PC market basically fell off a cliff at -15% year-over-year. New PC market information was recently reported by market research firm International Data Corporation, also known as IDC, in a published report. Total PC shipments for Q3 was 74.3 million units. That is 87.3 million units less than Q3 of 2021. And as we all know, inflation continues to rage in most of the world. Central banks are aggressively raising interest rates. Layoffs are sweeping the United States. So, consumers are pulling back on spending, especially discretionary spending. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.